Hey, what's up everyone? My name is Haroon and I'm a real estate investor. In today's video, I'm going to give myself 5 minutes to try to explain to you what I think is going to happen to the real estate market in 2022. Are we going to see any sort of a crash? And is it going to be as bad as what we saw in 2008? Or price is going to keep rising and rising and rising and rising and rising, like kind of like what it's been doing. Let's talk about that. All right, folks, before we even get into this video, I do want to explain, give you a bird's eye view of what happened in 2008, what caused that market crash. So pretty much what happened was investors, they got greedy. They were like, okay, I don't want to invest in anything that I keep investing in. It's getting boring, man, I'm bored. I don't want to invest in stocks, etc., etc. I want to invest in something new. Let's go ahead and invest in this thing called mortgage-backed securities, right? This sounds like a very non-risky investment. Worst case scenario, if nothing happens, I'll have a house at the end of it, right? But I don't want to invest in Sally and Joey's mortgage. I want to invest in a pool of mortgages. So investment firms went to banks. They bought like a bunch of these paper slips, these mortgages from people, right? From banks. And they sold it to investors. And it worked for a little bit because investors got a pretty good return on their investment, right? But what happened was, and what always happens, is people get greedy. So they were like, okay, you know what? We want more mortgages in the market. I want more of these paper slips, right? So they started approving people that couldn't even pay for their mortgages, right? You see that guy over there that can't really afford this house and does not really have good credit. Let's go ahead and approve him for a loan. Let's do it. And what happened was people like that, they started getting loans, they started buying houses. And as you may know, when you can't afford the house, you default on your loan. The bank comes and forecloses your property. And now the banks had a bunch of foreclosures that they just kind of like put out on the market. And what happened was that's what caused the pop. That's what bursted the market, and demand was here for the housing market. There's a lot of properties, a lot of foreclosed properties that had to come down to meet demand and price, so prices just dropped. Okay, so it's obvious that we're not going to see as bad of an economic collapse in 2022 that we saw in 2008. That's a given, right? But we still had an economic collapse during the pandemic, and we thought, okay, people really can't pay for the mortgages now because they're really not making money, right? So the way that the government dealt with that was they gave the forbearances. They're like, okay, guys, you don't have to pay for the next 12 to 18 months. And we were like, okay, cool. What about after? We're going to see more foreclosures then, right? That's when the market's going to collapse, right? Correct? Yes? No, that's not what happened because of this thing called loan modifications. Banks started remodifying people's loans, and whatever they owed that they didn't pay for those 12 to 18 months, they just added to the back end of the loan. So now people that had 30-year mortgages had 40-year mortgages, made them pay less, right? So in a sense, you have 40 years to pay for your mortgage now, so your monthly payments went even lower. People are like, that is awesome. I have a new mortgage, a new loan, and I have to pay less. Bet, I'll take that. Let's not foreclose the property. And that's what happened. Let's go ahead and spit some facts. I want to put up some numbers on the screen so you guys understand what I'm talking about. So since the beginning of 2022, we've seen 23,203 new foreclosures in the market. Now that seems like a lot, right? Since 2021. But the thing is, that's 50% less than what we saw as far as foreclosures in the market before the pandemic, right? So we're seeing less foreclosures after the pandemic, right? Number two, housing start has declined about 7.2% in existing home sales, right? So what does that mean? That means that developers that create houses, that make houses, we've seen a decline of them making 7.2% less homes this year than last year. And home sales have gone down about 1.3%. All of this is due to the fact that material costs has gone up a lot. It's skyrocketed. Lumber prices in the last 2 months has gone up about 10%. I think there was a report by CNBC which stated that it costs developers now about $20,000 extra to create a house. Now, that's a very high chunk of your profitability in a house, right? Let's say if the median home price in the US right now, I think is $350,000. And if you take away $20,000 of that profit, then I don't know if you're left with a lot to make. So that's why developers are developing, less homes. So there you have it. Those are your stats. That is your story. Now, what does all this mean? So pretty much developers are making less homes. We're seeing less sales, 1.3% less sales of homes this year. And there's not a lot of foreclosures. This whole entire thing is telling me that there's going to be less inventory in 2022, and there's still going to be demand. Now, inventory price has to meet demand, which means prices are going to keep rising. That's the complete opposite of what happened in 2008. That's your answer. We're gonna keep seeing a rise in prices. Hope you guys like this video. Are we good on time? Do we make it? I'm hoping that we did. All right, guys, it's a new channel, and I want you guys to show me some love. I'm gonna ask you for 2 things, okay? 2. 1, like and subscribe. That's it. Just 2 clicks. And I'll see you guys in the next video. Thank you for watching. Peace.